Here is a question nobody asks out loud. If the richest people on Earth already have more money than they could spend in 10 lifetimes, why do they keep investing at all? They aren't anxious about retirement or inflation. Most people invest to avoid being poor, but for those moving billions of dollars across a table, the game has changed. They are playing for something else entirely. David Rubenstein, the co-founder of the Carlyle Group, spent years debriefing the most successful financial minds on the planet. He sat down with the people who run sovereign wealth funds and private equity empires to ask one question: how do you actually think? We are living through an explosion of retail investing, meme stocks, crypto, and zero-fee apps. Yet the gap between how the public invests and how professionals think has never been wider. Examining this disconnect reveals the specific mechanics of how wealth actually compounds at the highest levels. There is an assumption that high-level investing is a rich person's sport, something you inherit. But Rubenstein found that the vast majority of elite investors started in the middle or working class. Growing up with a clear sense of what it feels like to not have enough creates a psychological hunger that traditional finance programs cannot replicate. The most successful investors do not view comfort as a reward for success. They treat early economic insecurity as a competitive edge, working to preserve that discomfort on purpose. This hunger acts as the engine driving their returns. In this world, satisfaction is a liability. Exceptional results begin by weaponizing your psychological state rather than trying to escape it. Conventional wisdom says that liquidity is safety. The ability to sell at any moment is framed as a way to protect your capital. The masters Rubenstein interviewed believe the opposite. The greatest historical returns have come from private equity to real estate and venture capital, precisely because most investors refuse to lock up their money. This chart shows the liquidity premium, the literal payment investors receive for tolerating uncertainty that others can't stomach. Managers at top university endowments, Yale, Harvard, Princeton, built legendary portfolios on this insight. They treat a multi-decade horizon as a structural asset, not a constraint. Patience is not a personality trait here. It is a financial instrument used to generate alpha. The final edge is an obsessive, almost irrational depth of knowledge in a single, narrow area. While retail investors are taught to seek broad diversification and general financial literacy, the masters do the exact opposite. One might spend decades mastering the nuances of distressed debt. Another might focus entirely on agricultural land in a specific, overlooked region. They build an information edge that the market cannot price efficiently, because the market doesn't know what they know. In a world of instant data and algorithmic trading, the remaining durable edge is a depth of understanding that cannot be Googled. This makes generalist investing look like expensive guessing. Without domain depth, you're competing for the same data everyone else has. This level of specialization creates an advantage that simply cannot be replicated by the crowd. These patterns, patience, specialization, and illiquidity tolerance, are transferable mindsets, regardless of your current net worth. However, this debrief is built on survivorship bias. We are only hearing from the billionaires who won the game. For every master investor Rubenstein interviewed, there are others who were equally patient and equally specialized, but who were simply wrong or faced bad timing. Treat these insights as a grammar lesson, not a recipe. These investors are showing you how exceptional thinking is structured, rather than giving you a portfolio to copy. The real question isn't which asset class you should buy. It's this: what do you understand about the world that most people don't? And are you patient enough to be right on a decade-long timeline? Exceptional wealth is built by redefining exactly what the rest of the world considers to be a risk.